Before we get into this video, please smash that like button and hit subscribe. You can support my channel and get yourself a stock worth up to $300 when you sign up for Webull using my link in the description below. It's a limited time offer and you can earn yourself another stock worth up to $2,000 if you want to deposit any amount of money. The markets actually held up pretty well today, considering what's happening with China. One major analyst thinks that this is a huge buying opportunity.
Let's bring in Tom Lee now, co-founder of Fundstrat, global advisors and a CNBC contributor for more on the markets. Tom, good to have you with us. What did you make of today? I mean, you're a bull. Let's put that out there. Everybody knows that. But the failure to bounce today, did that make you rethink where we are in the markets in terms of market sentiment?
I think the market held up incredibly well today. This Evergrande is the biggest shock to hit financial markets since COVID. And in a way, it's scarier because it involves quite a lot of debt. And, an obscure world, I think as people look at Evergrande, it involves a lot of leveraged products and off-balance sheet and SPVs. And, so I think the fact that the small caps actually rally today and the NASDAQ and the S&P managed to hold flat shows that the shock of yesterday was really the big impulse. And today is a little bit of the ripple effect. So I would say I think it's quite constructive, actually. Okay,
so you think it's constructive, but at the same time, for all the reasons that you laid out, why the market action was constructive, because Evergrande is this hairy problem that we have. We don't know how that's going to pan out. Isn't that a reason to be cautious about the markets longer term, since we don't know how this will play out, and we don't necessarily know either the impact on not just the Chinese economy, but even the sentiment of the Chinese consumer. Unlike our markets, the Chinese retail investor plays a big part in the markets over there. A lot of wealth is tied up in the markets from households, and losing a lot of money can really have an impact on the psychology there and then, therefore, the economy.
Yes. In a way, yesterday was a big shock to equity markets. But as you know, if you look at financial conditions, they actually barely budged. Oil barely moved. The 10-year barely budged, and even currencies barely moved. So this was sort of a shock that hit equity markets globally. And as everything you've described, I think, is correct. In Asia, a lot of people have money tied up in property or digital assets now, much more than financial stocks. And if I think about what that kind of means is I think we're just seeing the aftershock of retail investors largely who've been negative. They've been withdrawing money from equities for 6 of the last 7 weeks, and AAII sentiment was the worst reading last week for all of 2020. In fact, the worst since September 2020. So you've got a really sort of cautious, nervous retail market that I think kind of panicked yesterday. Institutions, I think, haven't really dived in because they're expecting aftershocks, and they think if it's like long-term capital or Lehman, that it's going to take some while to repair. So I think, in a way, the markets being flat today is actually a pretty good outcome. So again, I think we're still in a position where I think ultimately stocks are going to rally hard off this. And it's ultimately because unless Evergrande is going to cause a real seismic effect on the U.S. economy, I think the U.S. fundamentals are in good shape.
It looks like nothing phases this guy. What do you guys think? Is he too chill or is he crazy? That's going to be it for this video. Make sure to leave your comments down below. Smash that like button, hit the subscribe. Make sure to check out my other videos in my channel, and I'll see you in the next video.